So I've been having this interaction with some of my colleagues who trade the forex market. I was asking them what has been their most difficult part on the road to becoming consistently profitable. Of course, when it comes to becoming consistently profitable in the forex market, those of you who have been trading the forex market will know there are three main things you must get right before you start talking about profitability. Of course, you don't have any business talking about consistent profitability if you've not been able to understand these three pillars. So when it comes to becoming consistently profitable in the forex market, there are three things you need to conquer. Alright, the first thing here is trading strategy, the second one here is risk management, and the third one is trading psychology. For you to be consistently profitable, you must be able to conquer these three pillars. If you remember this holding stool, this stool cannot be able to stand properly if any of the legs are missing. Because this is the challenge that most people coming into the forex market face. Right here, you see strategy. Strategy is one of the most important part of your profitability. In fact, before you start even talking about becoming consistently profitable, you must be able to develop a trading strategy that works. Strategy is very, very important. Now, risk management is also very important because even with a very good strategy and without proper risk management, you are still not going to be profitable. It's just a matter of time and you blow up your trading account. Now, the final one here is trading psychology. Trading psychology is the mental aspect of trading. And so for you to become a complete trader, you must have a nice strategy, now good risk management and trading psychology, the right mindset. What is the right mindset for becoming consistently profitable? In fact, one of the first mindsets I usually tell my students about is that if you're coming into the forex market, you must have the mindset of probability. You should know that nobody has control over what the outcome of a single trade will be. That is the first mindset. You should also know that you are coming to a business where losses are part of the game. In fact, any person doing business doesn't want to involve him or herself with anything that has to do with losses. But here in the forex market, you are coming here into a business that losses are completely or totally part of the game. You cannot be a forex trader without having losses. So you need to have that mindset to embrace losses, right? But then you are going to use risk management to be able to minimize your losses while trading your strategy, because no trading strategy has 100% win rate. So this is about the three pillars you need to be able to conquer, the three pillars you need to be able to have before you can call yourself a consistently profitable trader. Now, out of these three pillars, which one is the easiest to acquire and which one is the most difficult? From my experience, I think the easiest part of these three is trading strategy. And all you need to do is just to get a trading strategy. And in fact, most trading strategy in the forex market to work, you must get a trading strategy. It is the easiest part. Now, the difficult part after strategy is having this risk management and psychology. These two, risk management and psychology, is actually more difficult than trading strategy. Why did I say that? Because most trading strategy works, but what destroys forex trader is risk management, discipline, and the ability to become consistent, to stay consistent and stick with the strategy. Now, let me show you something. If you check here, this is something I actually prepared. This is Eselsa-FX. Of course, you know, when it comes to trading strategy, I don't think any forex trader should have issue with trading strategy, because trading strategy is the easiest part in this puzzle. So a trading strategy has three components as well. For me to know that your trading strategy works, if I ask you how far, tell me about your trading strategy. As far as you are able to include or inculcate candlestick patterns into your trading strategy, every trading strategy that works must have these three components. Number one, candlestick patterns. You must have understanding of candlestick patterns. You must have understanding of market structure, and then you must have understanding of point of interest. So your trading strategy must have candlestick pattern included in it, point of interest, and then market structure. Now, what is the importance of these three pillars in your trading strategy? First of all, the market structure answers the question of who is in control, because any forex trader, before you make any trading decision in the forex market, you have to answer three questions. The first question here is who is in control of the market. Once your strategy has been able to answer this question, it's a very nice strategy. And the part of your strategy that will help you answer the question of who is in control is market structure. Market structure is just the study of market behavior. So you must understand the behavior of a particular asset before you start trading it. So who is in control of the market? Your understanding of market structure will help you know that. If the market is bullish, let's just assume that you've done your analysis and you find out that the market is bullish. That means buyers are in control of the market. The next question you need to answer is where is the best place or the best area to buy, assuming it is buyers that are in control of the market. Right? First step, you've analyzed your market structure, You've been able to confirm that buyers are actually in charge of the market. So you are actually looking for buying opportunity. The next question is, where is the best place or the best area to buy? This is where the concept of point of interest comes into play, right? So your strategy must put into consideration market search or point of interest. Point of interest will tell you the best place to buy. So this point of interest is actually the most confusing part. In fact, the most difficult part of the strategy is the question of where to buy. And that is why you have different traders with different strategies. Some people will buy using fair value gap. They tell you they will buy when market consider fair value gap. You see the concept of order block. You see the concept of Fibonacci retracement, moving averages, and a lot of things that people use just to be able to get to the best place to buy. And it is very important because you might see that the market is bullish, price might be bullish, moving up, but if you buy at the wrong place, you still lose your money. That is why the concept of point of interest and the area of value is an important component of your strategy. Now, the final thing now is, let's just assume that you marked your point of interest. It could be an order block, right? And then the price is coming to your order block. Now, the final question is, when is the best time to execute, or what is the final confirmation before I buy or sell? Of course, you know, when price comes into your point of interest, it is possible that your point of interest becomes invalidated depending on the type of candlestick pattern that plays it, depending on the type of chart pattern, depending on how price reacts to your point of interest. So these candlestick patterns and chart patterns is what gives us the final confirmation, the final signal for us to know whether you are actually buying or selling at our point of interest. You see, so when you come to learn forex, these are the three things you should put your mind in, especially if you are beginning. Going into the forex market, the first step is forget every other thing. You need a trading strategy. There is not that shortcut. You must have a trading strategy. You cannot be able to win in a market that is as complicated as this. How do you even expect yourself to be able to make money from this type of chart, especially gold, without having a strategy? It is impossible. You must have a strategy. Without strategy, you are going to be emotional here. You'll be the one that will be in control because you have strategy. Every action you take in the chart is based on your strategy, and your strategy should be rule based, right? It is better for the strategy to be rule based. So now you need a strategy. When you must have gotten the strategy, you now start talking about risk management and trading psychology. So, and to get your trading strategy, what do you need? You must have understanding of market structure. Market structure is one of the most important components of your trading strategy. You must understand point of interest. Just choose one or two points of interest that aligns with you. If it is order block, trade with order block. If it is support and resistance, go ahead. If it is demand and supply, go ahead. If it is fair value gap, go ahead. If it is Fibonacci, whatever concept you can use in order to be able to mark out a point of interest, because it is very important. If price is buying, every fool will know that the market is bullish. That is market structure. But not everybody. It takes high level of expertise to know the right place and the right time to buy. That is why point of interest and candlestick pattern is also very important. So if you want to dive deep into this concept and learn forex trading the right way, all you have to do is just to call me or come to the Forex Academy, Western Forex Academy, and I'll get you plugged in.